I spoke earlier to Flourish Carr. He is a principal at VC firm Flourish Ventures.
Obviously, we spend a lot of time working directly with those startups. And I'll say what's happening is the market has shifted. And so if you remember, when I was a kid, you would send money, someone would get the receipt, they would go to a bank and take it out. But as you know, all across Africa, folks are getting money in different ways. Right now here in Kenya, 98% of folks have M-Pesa. They're money through mobile money agents and through mobile money wallets. And so the remittance folks and the startups have taken advantage of this. They've used digital first API infrastructure to allow for money to go bypass the banking system, which is often really, really painful. It can be quite expensive. It can take days for money to arrive. If they go directly to some of these digital outlets and mobile money wallets, money can arrive instantaneously and it can arrive much cheaper. And so what startups have done is they've recognized a shift in the market to provide a more effective product. So now when I send money to Sierra Leone, my cousins can receive it in the same day as opposed to waiting a couple days and going to a bank account.
And what share of the market do they have right now, given that, as we mentioned, Western Union, MoneyGram were the traditional ways to send money? Are they gaining a significant share of the market?
They are, and it's hard to answer holistically because across Africa, in different regions, that share will be very different. In markets like Kenya, where there's already high mobile money penetration, it'll be much higher. It'll be the majority of a lot of the remittance inflows will come through digital means and will come directly through startups like folks like HoneyCoin or NALA or et cetera. In markets where there's less digital infrastructure, it'll be a lower percentage. But we're already seeing taking the lion's share in a lot of the large markets in Africa, which is a pretty strong development.
And there's a lot of talk about the role that this fintechs can play in terms of lowering costs, building fairer, more efficient financial systems. Give us more insight into that.
Absolutely. As I mentioned, there's a lot of folks like to complain about the bank system, the SWIFT infrastructure that most payments go through. A lot of that challenge isn't necessarily through the way that transactions are sent. It's actually through how things are settled. So how the last mile of payments goes from into someone's direct wallet or into someone's pocket. And so what a lot of fintechs are doing is they're actually doing a much more impressive job of putting boots on the ground. We're looking at a company in West Africa, in Sierra Leone and Liberia. And what they've done is they've built out a strong infrastructure of agents and individuals who work to ensure that customers can receive their funds much quicker than they would with a large international remittance player, because folks like MoneyGram and Western Union don't invest in these markets. And so what fintechs have done is they've recognized a huge opportunity to support customers in a more effective way. That's why I'm really excited. It's actually a huge market efficiency that's being created just through the work of some of these strong fintechs.
Well, they're certainly disrupting the space. But one thing I've heard brought up is also innovation, basically introducing new technologies such as the use of cryptocurrency, stable coins as well. How are fintechs innovating the space for cross-border money transfers in Africa?
Yeah, I could talk about this for a long time, but I'll try to be relatively brief. We talked about some of the challenges with the traditional banking system. And one of the challenges is actually with the dollars themselves. As you know, Africa is a net importer. So we take in a lot more goods than we export. And to pay for those goods, we need often dollars. That's the global currency. And so for the majority of African markets, there's a huge dollar deficiency. And so one of the gaps that stablecoins help to solve is just to allow folks to have access to dollars so that they can pay for goods and pay for products abroad without having these sort of currency controls that are in place in a lot of markets. Another huge challenge is just how to settle some of these currencies. I mentioned earlier that sending money through the traditional banking system can often take 2-3 days just to have an approved transaction. Stablecoins everything is done on chain. And so it increases the transparency and allows for more fluid flows of capital. And so there's a lot of use cases that make this a really valuable asset, especially for in African markets where you're a net importer, there's strict currency controls because it's hard to get, and so it makes it hard to get access to dollars.